Okay, so hello, my dear friends. This is CA Chinmay Hegde, your learning partner for understanding financial management. Welcome to day 6 of Let's Learn SFM Practically. First of all, disclaimer: this video is for education purpose only. Do your own analysis before investing. Four segments in our daily discussion. Quote of the day. Today, again, I would like to revisit what I've discussed previously, or I would like to tell in connection with that. Be greedy when others are fearful, be fearful when others are greedy. I would like to use that quote for applying in today's discussion. So, today terms, we are going to understand options basics, call option, put option, holder, writer, strike price, expiry. Uh, Again, I'm not discussing in detail. It's a brief introduction only. Holder basically has the right and writer has the obligation. One more term I can add, most importantly, option premium, also called as option price. Let me give an example straight away. For example, if Reliance strike price, that is a contract price, strike price is 2000. You are having a bet, you are having a view, the Reliance will be crossing 2000 rupees. You say, as a holder, that is called as C plus, or you can say call option holder, you say yes, it will go more than 2000. Another person say no, it will not go beyond 2000. That person is called as C minus, call writer. So you are telling a betting yes, it will go up, other person telling no, it will not go up. And there is a bet amount paid, premium amount paid from the holder to the writer. That amount, let's say 100 rupees. So if it cross 2000 rupees, for every excess rupee, the writer should pay the holder. Suppose if it becomes 2200 rupees or 2150 rupees. So how much you should get as a holder? 150 rupees he will give it to you. 150 rupees he will give it to you. But you already paid 100 rupees. 50 rupees your benefit. That 50 rupees is a loss for the writer. But if it crosses, if it is 1980, you need not pay 20 rupees. You understand? In the call option, the holder will have a bet that prices will go up. And the writer will think otherwise. So if the price does go up, then the holder will get the amount for the excess. His profit payoff will be difference between the profit what you got and the premium you already paid. For the writer, he's having opposite view. He's expecting the market price to come down. So he's receiving the premium, compensating for the call option holder. These are the few basic points you have to understand. So call option holder is having a bet, the market will go up, writer will not think otherwise. Put option is reverse. Put option holder is having a bet, market price will go down, whereas put option writer is having a bet, market price will increase. So in general, the holder will make a payment to the writer. It's called as option premium. That's called as option price. So in general, holder has got unlimited profit, limited risk. Even in call also, input also. The writer has got limited profit because premium received is the maximum profit for the writer. Premium paid is the maximum loss for the holder. But even then, most people will consider the holder as the risk taker, and holder position is not so popular. In my opinion, it's more riskier than the writer. Why is the case? We can discuss in the subsequent sessions. So call option, you understand, where the bet is on price moving up by the holder, opposite for the writer. Put option is a bet on the price coming down for the holder, opposite for the writer. Holder pays the premium, writer receives the premium. It's also called as option price. And a price at which you particularly fix is called as strike price. And the date on which settlement will take place is called as the expiry date, and usually we will have month end expiry. You can go for next month also. In India we have 3 months contract life, but typically liquidity will not be there. Most liquidity will be available for current month expiry, that is at the end of the every month, to be specific last Thursday of the every month. For index options like Bank Nifty and Nifty, we have weekly expiry also. But for the stocks, it will be expired on a monthly basis. So these are about the very few basic concepts, and keep it in mind. A holder will make the payment of the premium in advance, and that is his maximum loss, limited loss. For the writer, he receives the premium and he has unlimited loss theoretically, therefore he has to give something called as margin. What is margin? We'll discuss later. It's like a deposit, you can say. So these are the basic terminologies with respect to the option trading. You have to understand many more: payoff graphs, option chain, open interest, option strategy, option Greeks. You should understand these terms if you are trading, but this is just to give an idea about the options part of it. In the coming days, I'll try to give more exposure towards the options. Maybe I'll take an example also when I'm taking for a particular company. So if you understood the call option, the put option, the holder, the writer, premium, strike price, expiry. This is more like an insurance. Think the writers like an insurance. So in insurance company, what happens basically? You think like a put option. For that I'm telling. You have taken the insurance for your health and you have paid the premium to the insurance company. If you fall sick, then the insurance company will pay you the amount paying your bills. If you don't fall sick, then the premium whatever you paid is gone. Just like that is the position of a put option holder and put option writer. Put option holder is, let's say, having an existing portfolio. He is worried about the stock price falling down. So he says, if stock price falls below this number, I will be worried. You pay me the amount as compensation. Put option writer is like an option, is like an insurance company. They will receive premium, agreeing to compensate the loss for the put option holder. So think the options more like a insurance point of view, not like a gambling point of view. Okay, more than this I should not discuss. Let's go to the next segment, that is previous events. What and all have taken place? Yesterday, market has gone up. It is gapped up. Gapped up means open price only on a positive note. You know the open price concept. After that, market did not increase much. It stabilized. We say consolidated. We discussed the concept of FII, DIA data. And yesterday, FII also bought, DIA also bought. Both foreign institutions, domestic institutions have bought, but not very great, put together around 1,000 crores. So DII have been buying for consecutively last many days, but the amount of buy was less yesterday. FII was sellers for last few days, have become net buyers yesterday, but little bit amount, some 600 crores I think. You can check the way I told you yesterday to take the data on the website. Auto sector is high. Hero, Motor Corp, Maruti Suzuki, because the sales was good yesterday. Therefore, market provided. But actually, last 1 month, if you see, this auto sector was on a downwards trend. Auto sector was downwards trend because the auto sales were not good. Lockdown were there. Still, lockdown is there. But the stock market always works on expectations. So when there is a news on lockdown, auto sales have gone down. Now the lockdown is there everywhere, but now we are hoping to have a better economy in the coming days. So auto sectors will go up. Market always works on expectations. So in my opinion, for a short term, maybe for a week or a month, auto sector is a good buy. My opinion only. Oh, top gain were bank. Oh, that's what previous day actually. No, sorry, this is not right. This was the previous day. Let's ignore that point. Earnings in the telecom sector was loss. Earning was in telecom sector like Bharti Airtel was down yesterday. Even in international like in US also, telecom companies are reporting downwards. They are not reporting so much of expected profits. Corona cases are reducing. Okay, these are the brief events which have taken place yesterday. Let's see what will happen today. Local queues are the recovery is taking place. The corona cases are reducing. We are and the death rate is less. Fatality rate is less. So local queues are positive. I can say. Global queues. Okay, let's go to a Nasdaq and let's go to Nasdaq. Let's see what happened yesterday. Oh, market was down yesterday. You see, it started down, but down. Very marginal. Nasdaq was down. Then I hope you can see, right? Yes. Then Dow Jones. Dow Jones also fallen sharply yesterday. What is the main reason for the international market to go down yesterday? I mean, after Indian market closed out is because one of the reason is inflation worries. Fed meeting, like in we have RBI, they have a Fed, US Federal, like a central bank. They are central bank, not like, but like RBI. And they are going to have the meeting in the coming days, and their agenda will likely to be released today. So market is trying to take a hint out of it that there might be a chance of increase in interest rate because of increase in inflation. When interest rate increases, it's not good for the stock market. So in that expectation, the market has gone down. Okay, let's see what will happen to Nifty 50 today. Okay, it started I think negative. I think I was about to say that, but let's see. I'll go to the website. Let's say moneycontrol.com. Let me go to the chart. Okay, hope the chart is loading down. Okay, I'll put it for last 5 days. Look at the last 5 days. Market has started up already in last 5 days. It's gap up. You see, stock market is never going to be a linear one. I told you it will never go up straightforward. But in last few days, it has run too much. Even if you're a runner, if you run too much, you need some breather space for you to run further. So market last 2 days have increased like anything. You need some breather time. Tomorrow is also expiry, and yesterday global cues were not so good. So in my opinion, the chart looks like a stabilized one. So stock market, what is likely to happen? Indian context, Nifty 50. I think it will see a marginal downfall. So looking at the numbers, 15,100, 108 is yesterday close, and today open I think is around 15,000. 50 or something, and we also see a good support level in that level 15,050. You see, two times that support was reached yesterday. I'll show you the chart once more, 1 day chart. You see that 15,030, 15,040 has become a support. And one more point, it was a resistance level earlier, 15,000 Nifty. Now it has crossed that comfortably yesterday. That 15,050 will become a support level. So my expectation for the today, okay, let me go back to the PPT and let me show you the assessment. Okay, our assessment, local cues are positive, global cues are negative. Chart analysis, market has moved up already. So chart analysis, market is going to be down in my opinion, because it is going to be consolidating. What is consolidating? It will be now not going up too much, not coming down too much. Your take, market needs time to go up. It will be bullish in the long term in the coming days, but market needs some time for breather. So overall assessment today, in my opinion, market will be down around 0.5% to 0.6% down. So 15,100, 108 I think was yesterday's close. I think today my expectation, it will go down around 15,000 or 15,020, something like that. That is my expectation Today, Nifty 50 from 15,100, it will go down to 15,020. It can come down to 14,900 also. But I've seen option interest, option chain analysis and all, the option interest looking at the good support. So even if it goes down to 14,900, it will come down to 15,020. So in my opinion, if market goes down to 14,900 and all, it's a good time to buy, even if you're doing intraday trading. So I got one question, very good point, that you got a cash back by attending live sessions, very good. You purchased 1,110 and you sold 1,083 Tata Steel. You made a profit of 23 in just one day, good. That is what I tell you. Tata Steel gone up like anything and it reached some profit booking. So market price went down. You bought it and market price is going up now. It will go up further. There is lot more potential as far as the metal sector is concerned. But exact same learning you can apply for Nifty also. In last 2 days, market rallied like anything. And today, tomorrow, maybe market will stabilize. I don't know how long, depending on various cues. But again, after that, it will start going up. So during the consolidation stages, breakout stages, wait patiently and purchase at the right price. What exactly is the gap up happens? What does gap up mean? Gap up just means that the open price is higher than the previous close price. That's all the meaning of gap up. So starting point is only higher point. And how the open price will be fixed, I discussed in the day one video only. You can watch that. So that's it for today's discussion. Hope there is some value addition in your learning, understanding financial management practically. Spend more time. Happy learning. We'll see you tomorrow at same time. Till then, take care. See you. Bye-bye.